Hi, Matt McAleer, Director of Equity Strategies, Cumberland Advisors, June 30th, 2023. End of the month, end of the quarter, end of the first half. NASDAQ is all you really can talk about, up 38, 39%. Best first half when I checked, in the last 50 years. We'll see if that has pulled any performance from the second half forward. In terms of what's working, we know what's working. Growth's working. Technology's working. Remember, the market will always make you feel foolish in the rearview mirror. Any sales we made, and we did make some trim sales in our tactical account. 2 weeks ago, we talked about trimming some Qs, trimming some Adobe, trimming some names that had had a spike run. Well, we shared that chart with you 2 weeks ago of why we did that. The NASDAQ, 150% overbought on a 10-week statistic that we look at from an analytical view. That did back off, by the way. I didn't think it was only going to back off 3%. The fumes and rocket combustors hit, boom, back up to where we were. S&P, NASDAQ, right back to where we were 2 weeks ago. We'll see going forward if they give any opportunity for money to start rotating into some of those sectors that have acted better lately. It's been nice to see the breadth spreading out. Industrials specifically, transports, very strong. What would bother us heading into July? A couple little things that we look at, and I've mentioned it on the call before. We like to see what the small speculator is doing in the options market. We define the small speculator as the 20 and under contract trader. They tend to be emotional at extremes, and we are seeing significant call buying from the small speculator group in the S&P calls. So that's something we think at least be aware of. We're back to being quite overbought on a 10-week analytic that we look at from a momentum standpoint. Just be aware of it. Does that mean the market's going to turn around and fall apart? No. Be aware with fresh cash that you are, or we are, nibbling or buying into a market that, from a traditional standpoint, has gotten a little overheated. What do we do this week? Not too much. Nothing on the sell side. Didn't take anything off the table. On our U.S. ETF strategy, we did add just a couple small allocations to current positions in small cap and in equal weighted S&P 500, which has significantly traded below the S&P. What we want to see is if the equal weighteds can catch up to the cap weighted. Now we're going to toss it over to John Mousseau, who's taping remotely this week.
Hi, it's John Mousseau. I'm the CEO of Cumberland Advisors. This is the bond report for Friday, June 30th, around 11 o'clock. It is the end of the quarter. What did we see this week? We saw movement up in Treasury yields, again, based on stronger economic numbers. We saw the 2-year bond basically up about 15 basis points, the 10-year bond up about 10. Muni yields almost unchanged on the week because of a reduced calendar. But you're almost back to the yield levels that you saw prior to the bank crisis. So I think one of the things that we want to talk about is the fact that the bank crisis precipitated a view that the Fed would start to cut rates. You see this in this chart, which is the 2 to 10 year yield curve chart. It got extremely negative, was 108 negative back at the beginning of March. The market expected the Fed to cut rates when they had the banking crisis. They did not. They've raised rates, and they just paused. But the important thing is that the expectations that are built into that negative yield curve really changed during the banking crisis and now have reverted back almost to where it was pre-banking crisis. So you're back to negative 100. It had peaked at 108. It got down to a low of minus 40. So most of that has all been undone. We have that chart up. I think what it says is that the market still expects the economy to slow, the Fed to eventually cut rates, and that's why you see the shape of the negative yield curve that you do. We continue to believe that things like tax-free bonds, particularly out in the intermediate and longer end, where you can garner 4.25% or more, presents a very compelling argument on a taxable equivalent yield basis, and obviously more so if you're in states with high taxes. We hope everybody has a really good Independence Day weekend. You know, no need to preach about how much we're so lucky to have all the freedoms that we do here, and you know, sometimes we take it for granted, and we should not. Have a great weekend, everybody, and we'll see you next week.
Thanks, Moose. Everybody enjoy the 4th. Remember, Monday, the markets are open, but only for half a day. Enjoy the weekend.